Hello and welcome to today's FXTimes Daily Market Recap. I'm CMS Forex Market Analyst Nick Nassad. Today is Wednesday, January 20th, 2010. The dollar was a very strong performer today, as well as the yen, as we had global risk aversion and we had falling global stocks. We had news from China that the government may be seeking to put further brakes on its economic growth, which led investors to flood into the safety of the Greenback. The news from China was that the China Banking Regulatory Commission is telling banks to curb lending, and the Shanghai Composite Index lost a substantial 2.9% in today's trading. That was followed by steep sell-offs in Hong Kong, in Europe, and in the US. Taking a look at the euro-dollar pair, we see that from our open around 1.43, we slid all the way down to the 1.4080 level. That was a change of nearly 200 pips, and we smashed through our support level around 1.4250, which we had stalled at in yesterday's session. That was the support we had here from our consolidation in the end of December and January, and the beginning of January. Taking a look at a daily chart, we see that today's price action is the lowest this pair has been since all the way back in August 19th. The euro slid against the yen as well, as the yen is a safe haven currency during times of risk aversion. Also, the euro has been pressured by concerns over Greece debt and its fiscal situation, and so that has been pressuring the euro throughout most of December and January. Though here we had the euro climbing during December against the yen, but we've seen a very sharp reversal, and we have paired most of the gains that this pair has seen during this rally here. Look at the dollar yen. We remain within the range we've seen the past several sessions, and there was not that much action here today, as both the greenback and the yen are favored during times of risk aversion, and so we did have a dip in favor of the yen and European trading, but then the greenback managed to regain those losses, and we end trading slightly above where we started today's session. The weakness in risk appetite extended to the pound-dollar pair, which we see here, and we had slide down to the 1.6250 area, which is now our support. That came despite a better than expected employment report from the United Kingdom. Zooming this pair out slightly, we see that the 6250 level was an important support level in last week's trading and at the start of this week's trading on Monday. We'll see if perhaps we're seeing a bit of topping action following this rise throughout the last 8 or 9 sessions or so. Though obviously what happens now following this test of support will determine the fate of this pair. Looking at the euro pound, we see the weakness in the euro reflected here as the pound managed to gain for what is now a 7th straight session. In a third look at a pound pair, here the pound yen, we see that we're shaping up in a bit of an ascending triangle pattern. If we connect our lows from January and we draw a resistance level around the 1.4950 area. So this is a consolidation pattern, and as we squeeze closer in between these two levels of support and resistance, it increases the chance that we may have a breakout to one side or the other. Taking a look at UK fundamental data from today, we see that the UK labour market got another shot in the arm in December, as the number of claims for jobless benefits declined by 15,000 to 1.61 million for December. That figure was better than expected, and it followed a better than originally reported 10,800 drop in jobless claims in November. The ILO unemployment rate dipped to 7.8%, surprising forecasts for the month of November, and this is the official unemployment rate used by the government. So 2 strong months of data is a welcome sign for that unemployment may have peaked in the UK. We'll see if this data, along with the very hot consumer inflation data we saw this week, how it will impact the Bank of England's decision making in its next meeting. At that meeting, the bank will have concluded its £200 billion of asset purchases, and traders are looking to see whether they will expand the plan or if they will stop there. Before we move on to some US fundamental data, let's take a look at Canada first, as we had consumer prices come out for the month of December, which came in weaker than expected. On the month, consumer prices fell 0.3%, following a 0.5% rise in November, and the annual rate rose to 1.3%, but this was weaker than forecast. The core readings for the month were down 0.3%, while the annual rate remained at 1.5%, surprising forecast to the downside. So this report showed very weak inflationary pressures, and it limits the hopes that we might see a more hawkish Bank of Canada in its next meeting. Traders will have to wait till March 3rd, so the next Bank of Canada meeting, as we just had one yesterday. And as you can see from this look at the US dollar Canadian dollar pair, following the CPI, we rose above the 1.04 level, which had acted as important resistance throughout the last 2 weeks, and we topped off today at the 1.0490 area. The Canadian dollar was also pressured by weaker oil prices and the general sense of risk aversion as we had falling stocks around the globe. This move today, which amounted to about 180 pips from low to high, was the largest gain by the Greenback against the Canadian dollar, one-day gain in 3 months. In another bit of consumer price data, this time from New Zealand, for the fourth quarter, we saw that consumer prices were down 0.2%, which was lower than the flat reading expected by economists, and much cooler than the 1.3 increase in consumer prices we saw in the third quarter. On the year, prices were up 2%. Taking a look at the New Zealand dollar US dollar pair, we saw a very sharp reaction following the news, and throughout the day we had about 150 pip slide in the pair. We broke below support at 0.73, which had acted as support here on 2 weeks ago, and we break out of this range that we have been seeing the last 2 weeks. The pair found support around this level that we had here, near 0.72. So again, part of this was the weaker CPI data, while we also had weaker risk appetite, which would favor the greenback against the New Zealand dollar in this pair. And also the news from China affects the regional currencies like economies like New Zealand and Australia more than it would others. So that was reflected in this price action here today. If we take a look at the Australian dollar pair, we see Australian dollar US dollar pair, we see a similar decline in the pair as we broke below an important level of support around 0.9170, and until we found support here at the 0.9080 level. So again, we broke out of a bit of ranging action that we had seen. Also, if we zoom this pair out, we see that following our test of 0.9330, we had what looks now to be a nice double top and topping action, and now we may further correct this rally we had that started in late December and lasted throughout the middle of January. Now let's take a look at some US data, as we had construction, a report on construction come out with housing starts for the month of December declining 4% to an annual pace of 557,000. That disappointed forecasts. However, building permits, which is a measure of future construction activity, jumped 10.9% to an annual rate of 653,000, a positive sign for future housing construction. Also today we saw producer prices in the US rise 0.2% in the month of December, a much tamer reading than the November reading we had of 1.8%. On the year, producer prices were up 4.4%. Core readings, however, were very cool, as we had a flat reading on the monthly index, and the annual PPI came in at 0.9%, which was lower than in November. Now let's take a look at some upcoming fundamental releases from the upcoming session. Tonight, New Zealand posts data on manufacturing and retail sales, while Australia releases information on inflation expectations. Overnight, we get flash services and manufacturing PMIs from Europe and Germany, and the UK will release data on public borrowing along with industrial orders. Tomorrow, the US will post its weekly jobless claims, its leading index, and the Philadelphia Fed Manufacturing Index, while Canada releases its wholesale sales and the Bank of Canada Monetary Policy Report. And that'll do it for today's recap. For more news, videos, and analysis, please visit our site, FXTimes.com. I want to thank you for watching and wish you good trading.